Howdy there, folks. Welcome into today's video. I got two to react to in this one here today, folks. Two videos for me to react to. First one is we're in a normal market setup that could lead to a higher trading range. I want to hear what this gentleman has to say. He believes the market's about to bust out. I want to hear what he has to say in regards to that, react to that, kind of give my perspective and opinion on his points here. Then we're going to watch this one, Joe Terranova, and this one I actually haven't watched yet. I'm excited to watch it, though, on why he believes Microsoft, Alphabet, and Meta are going to take the S&P 500 to over 4,200 here and kind of get us out of this trading range we've been in, because it seems like we've kind of been in this like 3,900 to 4,100-ish trading range, and everybody's kind of looking, even the bears and the bulls are both looking, and they're like, when's this market going to do something? Like, give us some clear correlation, give us some clear signal of this market going higher or lower, right? And it's just kind of like it's not doing a lot of anything. Let's just call it that in terms of the market, right? There's a lot of stocks inside the market that are moving big up or down, but in terms of, you know, this trading range, we just seem stuck right now. And it seems like the bears can't get enough to go their way and the bulls can't either. So yeah, react to both these. I appreciate everybody joining me as always. Thanks for being here, folks. We're about to hit 26,000 subscribers on the channel. I appreciate every single person that subscribed to the channel. If you want to apply to join my private stock group, the private wealth group, that will be in the description area down there for an application to join us in there. Get access to all my course curriculums, everything I know up here, our 6- and 7-figure community, everything like that. Alrighty, let's get into this.
Wall Street's brightest minds to share the word they believe will describe the trading day ahead. Jeff Kilberg, what is your WEX word of the day?
My WEX word of the day, Frank, is abnormal. Abnormal is the current market conditions. And you're right, this week it's a massive week. We have 178 S&P 500 companies reporting. If you think about what we have, this cross-section, the diversity of the different sectors.
That's insane. Almost 200 of the 500 S&P 500 companies are reporting literally this week. Yeah, these next 3 weeks are insanity, folks.
Really delivering earnings report, I get excited, but it is time to tape your ankles and buckle your chin strap, because here we are with better than expected earnings. However, it's a very abnormal environment. We're seeing the VIX closed last Friday at 16. That could reveal some complacency. However, when you look at the sentiment, the sour sentiment, followed by some positive data, strength in the recent data, inflation abating, I think it's a very abnormal setup, and that's going to move the market higher and bust us out of this range. We've been stuck in this range, Frank, nearly 250 trading days. We have been tethered to 4,000, the S&P 500. So I think if you look at some of the forward guidance on some of the companies, that may be the catalyst. But also, let's talk about the 800-pound gorilla in the room, the Fed. The Fed is 9 days away from our meeting, and we've already seen a very type of dovish 25 basis point rate hike absolutely being priced in.
All right, so I want to get back to earnings with you, Jeff, especially the earnings today. We have Coca-Cola, we have First Republic, and Whirlpool. I mean, what a look at what's going on. Let's start off with First Republic. That report, what could that tell us about the banking sector that we potentially haven't learned already?
Well, it could just kind of formalize and fortify the fact that we are seeing some of these mid-sized regional banks be more isolated. Yes, we saw Silicon Valley Bank really make a mistake when they were...
Alrighty, folks, let's take a look at First Republic and see what actually happened to their stock price here today. This should be interesting. Dun, dun, dun. First Republic up about 9% or so today. So looks like they took it as a positive in regards to First Republic here. Alrighty, so let's get back to this. So Coca-Cola report, by the way, wasn't as good as it seemed when you actually dig into the numbers.
To match their obligations, they got a little greedy on their treasury book. They got a little bit more than greedy. They closed their bank. But nonetheless, I think it's going to give us a better understanding. But banks, by and large, we've seen J.P. Morgan, we've seen Morgan Stanley, we've seen some of these names report better than expected. And if you look at the 20% of the names that reported thus far, Frank, we've seen a better than expected beat. And that has been on average by about 6%, which is far above average.
What's your quick take on Coke? Is that an accurate read on the consumer? And also on what's going on in the global economy?
You know, I think Coca-Cola does give us a great reading, but I want to shift to Hershey. Look at Hershey. It's been a delicious chart, Frank. If you look at the year-to-date, 1 year, 3 or even 5 years, up 182%. So I look at a little bit different nuance, look through a little different lens, but Hershey is a name that is really insulated to the economic headwinds. If you see us go into recession, people still like chocolate. If you see us not go into recession, people still like chocolate. So look at Hershey instead of Coca-Cola. But I also look at this week when you talk about Intel, you talk about Boeing, you talk about Visa. Those those are names that I consider blue chip names. Intel has had a really rough 1-year chart, but nonetheless, those are positions I want to add to. And lastly, let's not forget about energy. Let's not throw away energy. I know it's had a rough year to date, but last year was sensational. So look at Chevron reporting, the little brother to ExxonMobil, but Chevron should have a better than expected report as we've seen energy, a lot of profit taking come into the sector.
You know, Jeff, we really like to focus on something actionable for this actual trading day ahead. So are you going to put money into Chevron today? Is that where you would put your money, the energy sector?
I'm adding to all these positions pre-earnings, and you can utilize that by using options. So a lot of call options, a lot of call spreads we want to own and define our risk. So yes, each and every one of these names from Visa, Intel, Boeing, and Hershey, and Chevron, we want to have exposure to because there's opportunity right now. You're seeing such mixed emotions, and people are having a hard time valuing some of these companies because they're so sensitive to the potential forward guidance of this looming recession.
Oh, so I saw Hershey there, and I'm like, it seems like a trap. Something's going on here, okay? So I did something that I thought was important because I thought about, like, what's, the most important things that go into Hershey's? Oh, gosh, sugar, right? I just pulled up sugar chart, okay? And I don't know if you guys, how well you can see this. That's the price of sugar. That's the price of sugar over this past year, okay? Literally, it's taken off like a rocket ship, basically right before we kind of got into 23, and it's just gone to the moon. So when I look at something like that, right, and I think about somebody like a Hershey's, what I think of immediately is their margins are probably going to be hit over this next year. And this great increase in profitability, margins, and everything you've seen over the last few years, honestly could take a major hit over this next year. And don't be surprised if they're spending on quite a bit of marketing right now as well. And all of a sudden you get hit with, those sugar prices the way they are. And next thing you know, you're all of a sudden into a situation where margins start to actually, let's call it, go down potentially over the next 12 to 18 months. And if that happens, next thing you know, you're looking at a Hershey's that's back in the $100-something range instead of the $260-ish or wherever it's at, okay? So always think about these things. Some of these businesses are very, I went through this last year. What stock did I own that got insanely hit by the commodity super cycle? There's a lot of them did, okay? I'll be honest, pretty much every one of them did. But there's one stock specifically I'm thinking of. If you watch my content a lot, you know that stock. It was Oatly, right? Because the price of oats in at the end of 2021 and going into 2022 went to the moon. And for Oatly, like the two most important ingredients for their product, water and oats. So if you're talking about the most important pretty much raw ingredient other than water to go in their product is gone to the moon, oh my gosh, it's awful for your margins, it's awful for your profitability, your cash flow, everything like that, right? And so Oatly, we're already starting to see their margins improve, but you'll see their margins likely improve dramatically as this year kind of ticks on here for Oatly. And you look at somebody like a Hershey's, I wouldn't be surprised at all if you actually see their margins go down as this year ticks along. So that's just my opinion and belief on that whole situation, okay? Next one up here, Microsoft, Alphabet, Meta. They're going to help this market break out above 4,200, says Joe Terranova.
As we gear up, as aforementioned, for this busy week of earnings, 1/3 of the S&P 500 is reporting results. That includes 4 tech titans, Alphabet, Microsoft, Meta, and Amazon. So what's at stake as we kick off this monster week? Joe, I will turn to you first since you are sitting right next to me. I mean, there is so much at stake right now. We're just treading water, trying to make sense of where we're going. What's top of your radar?
Well, I mean, the market is basically sitting above 4,100. It's been doing that since the early part of April. And you're right, this is a huge week because now you have the potential catalyst that comes in the form of earnings, in particular for the mega caps. So Microsoft, Alphabet, they'll be reporting obviously tomorrow. That's the catalyst. That's what moves the market technically towards 4,200 and tests the upper end of the range. And I think that's what this is all about. You've been in a range between 3,800 and 4,200 since November. We're seeing if we can kind of break out of that range or not. And this is the moment. These are the stocks that if you are going to break out of 4,200, they're the ones that are going to do it. Meta on Wednesday, Amazon on Thursday. If we do not have those stocks act as the catalyst to get us above 4,200, we fall right back into that very troubling range between 3,800 and 4,200.
And we're going to dig in more to those technicals too in a little bit.
I don't understand. So why is that a troubling range? It's not a troubling range. It all depends on your outlook, right? Think about it this way. I understand if you were a short seller or you own put options, I understand you really needing this market to go lower here, right? So much bad news still going on. You really need this market to go lower as soon as possible, right? If you're a long, I can understand if you own short-term call options, you really need this market to break higher, right? Because you're like, crap, my options are going to expire worthless unless we get this market moving. For those two groups, I understand why it's a troubling range and, it's frustrating and all those sorts of things. For longs, I don't understand why this would be a troubling range. If you're really bullish on the market for the next, 3 years, 5 years, 10 years, 20 years, right? Because at the end of the day, if you can get a elongated period, right, where the market really hasn't gone anywhere for 2 years, where you can buy into companies at great prices and you can build out those positions over several years, it's the best thing that could happen to you as an investor. The worst thing that can happen to you as an investor, and ask anybody that got in the market at the end of 2020 and the beginning of 2021, ask those people what's the worst thing. They're going to tell you, okay? Ask people that got in the market in 1999. Ask people that got in the market in 2007. The worst case scenario is when you're in a blow-off top situation, everybody's only looking at the positives. There's none of the negatives are out there, because those are the markets that can obviously take you down and take you down in a massive, massive way. So I look at a market like this as a long, and I welcome it. I don't need my portfolio to say a certain number tomorrow. I do care that it says a certain number 3 years from now. I do care that it says a certain number 7 years from now and 10 years from now, okay? And so that's kind of my thought process about that. If you told me, Amazon's a main focus of a stock I'm buying this year, right? And there's a lot of stocks I'm buying this year, but that's my main focus. If you told me, would I rather have Amazon go to 150, next month, or go to 95 next month, 95 without question. I'm a buyer of the stock. And I can buy a whole lot more shares at 95 than I can 150. I can tell you that much, right? I'm not going to be a seller. Even if the stock went to 150, I'm not going to be a seller because I'm holding Amazon until it's, many hundreds of dollars, because I believe it's going to be a multi-trillion-dollar market cap based upon where I think its net income's going and what I think the P ratio the company could command, right? Think about these things for a moment. It's not a troubling range. It just depends on what your perspective is in the market. Are you a trader? Are you short? You really need something to happen here. Or are you, a call option player? You really need something to happen here.
Steve, a lot of these names, of course, yes, they're all mega cap tech, but they have their own stories. They've got a lot going on, percolating under the surface. Is there anything in particular we need to watch for one by one? Or is there a theme that we need to make?
Mr. Short Hills Capital pays us a visit already.
To follow through for each of these names as they report?
Well, I don't expect them to miss necessarily because they missed last quarter. So how often do they miss 2 quarters in a row? But if you look underneath, what we'll be looking for is what's happening with the cloud. Have you seen the growth, which has slowed down, either flatten or move higher? I don't suspect you will because of the economy. So it's been economically related, the slowdown we've seen it. So that's not going to work. Then you look at the ad spend. So the ad spend, at least for Amazon in part, but Meta and Alphabet, that's important. They're important drivers. I don't expect to see a pickup there either. So what they're going to talk about is the efficiency from headcount reductions, except for Alphabet, which really hasn't had a lot, and actually neither has Microsoft. So are they truly more efficient, or are their ratios, financial ratios, going to be subpar? Look, I think they can do okay, but what it's going to do, it's going to tell you the economy's not doing so great. That's my bet. So
the main issue with this particular earnings and why we're not going to get the information we really need, in my opinion, the reason is I believe with these earnings, it's going to lead you to a place where you're trying to figure out, okay, are we bottoming out in terms of companies' revenue numbers specifically, and we're going to start trending back up at the back half of the year? Or are we in a stagflationary type environment where, you could see earnings and revenue specifically, let me talk about revenue rather than earnings, revenue not go anywhere. And I don't think you're going to get actually that clarity on these earnings. I think it's really going to be the second quarter when you get that clarity. I think right now, maybe executives are slightly more confident, but I don't think they're going to be over-the-top confident. I don't think you're going to hear over-the-top confidence from Google, Amazon, Meta, those companies in terms of revenue growth for the back half of this year. I think really, if you want that opportunity, that's going to be the second quarter. This is kind of just more of like trying to figure out, are we bottoming here, or do we have lower to go, or are we just going to be stuck in this kind of ranges here for, let's call it a bit of time?
Appetite for these stocks, I think what you're seeing today and what you're seeing recently with NASDAQ selling off somewhat is that, not a lot, somewhat, is that people made a lot of money buying these, safety going in there. Now they're wondering, should I take money off the table or not? So I think it's going to be a very interesting week. It's not really going to change my narrative, though, in terms of saying the economy is going into recession.
Brendan, you're invested here in some of these names, some of these big mega cap names. As Weiss pointed out, of course, the NASDAQ is down about 0.8%. Is that sort of a vote as to what may be happening when these names report? What is going to be important for you to stay invested in some of these mega cap stocks?
Well, I mean, I own, from an individual security perspective, Microsoft, Apple, and Nvidia, which is not on the call this week. But here's what's interesting, though. I think to kind of dig in deeper to what Steve was talking about, within the cloud, which really is Amazon and Microsoft. The Google Cloud is only 9% of revenues. They lose money on it, and it's actually 25% of their workforce. But I think the Amazon, the enterprise from the cloud on both companies will be really important about the economy at the enterprise, at the company level. But to me, what's going to be interesting, I think the wild card, if I had to look at the 4 companies reporting, I would say Amazon, to me, is the biggest wild card. It's been down 8 out of the last 10 quarters. And it has missed earnings and revenue forecast 7 out of the last 8 times, and actually reduced with the last 5. So Amazon going into its quarter, the last 10 quarters, has not been a good stock to, let's say you want to speculate and buy it today thinking it's going to bounce. That, to me, is still the biggest wild card, because I do think Andy Jassy's been really clear. They had so much CapEx spending during COVID, they're still digesting that and they're still spending. But I think overall the referendum, if you look at the first quarter in April, Amazon's up 27, Apple's up 27, Microsoft and Google are up 20, and Facebook or Meta even more so. So I think the referendum is the first 5 weeks, or the first quarter in April, has been so positive. But I think the majority of the returns for these stocks have been earned in this first quarter. And I don't think we're going to see big surprises, especially, Courtney, since the dollar has weakened. All of these companies, Microsoft and Apple in particular, talked last quarter about the FX headwind. That will be a tailwind, I think, for sure on the first quarter.
Those are really good points. And it's interesting, too, to talk about where they've gone, or how far they've come, really. If you look at the technology stocks compared, Joe, to the S&P 500, really outperforming. I think the most sense I read a stats, since 2009, when it comes to the outperformance since the beginning of the year.
And there was a significant the positioning was well below what the market targets were for a lot of portfolio managers. So if you think about where we came into this year, technology was held at an underweight. You didn't have that type of positioning really since the great financial crisis.
Yeah, my main concern this week is actually Amazon skyrocketing on earnings. That's actually my main concern. I'm very concerned with that stock hitting the 120s this week. Very concerned with that. I'm hoping it doesn't happen, obviously, because I want to continue to buy that stock for as cheap as possible. So I'm hoping it goes down on these earnings and goes under 100. That would be an ideal situation. But I am worried, very worried, that stock's going to hit 120 something this week and blast higher on earnings. If Andy Jassy has some good things to say on that conference call, that, they're kind of seeing a bottom in AWS, oh my gosh, I mean, that would be huge for the stock, right? If obviously they get more into the nitty gritty with the numbers and how many billions of dollars their cost savings are going through right now are going to be, if they're talking about margin uptick, profitability uptick in the e-commerce business, if advertising is still remaining decently strong, I mean, those are sorts of things that will send the stocks back over 120. It's been a lagger. You saw it, how much it's underperformed Meta, right? It's night and day difference, right? It's kind of been performing similar to Apple, Microsoft, and those other stocks. And that's not normal for Amazon. It usually way outticks those on the upside and way outticks those on the downside as well. So I have big concerns about that one popping and being in the 120s this week. I hope it doesn't happen. I hope it goes under 100, but I'm concerned. Let's just put it that way. Appreciate everybody joining me as always. Much love. Once again, if you're looking to apply to join my private stock group, the private wealth group, the application will be in the description area. Appreciate everybody. You can also follow me on other social medias, and have a great day.